With the weekly candle close just occurring and the FOMC data just around the corner, this is by far one of the most important analyses we have done of 2024. In today's video, we're going over the macro data, the short-term charts, and everything in between. Let's go ahead and dive in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a great day today. In today's video, we're going to be taking a look at the macro and short-term charts, discussing a few key technical indicators on the weekly and monthly chart you need to be watching moving forward. We'll also be discussing the overall macro trend and the likelihood of a continuation upward into the next bull run. Furthermore, we'll be going over the short-term charts, discussing what is happening, the weekly candle close, and what to expect next. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in taking it a step further, you can join our VIP group. We post trading setups with the exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to the group chats, the general chat, the trading chart and education chat, the news, the help, the trade setup, and the video chat. If you're interested in going into all of that stuff, contact me in the pinned comment of the free channel for more information, and we do have a sale starting today, so keep an eye out. Without further ado, let's get into the video. So like we said, we have a whole bunch to discuss today. A lot is happening on the charts. And of course, as we approach that weekly candle close, the last weekly candle close of the month, we do approach a pretty significant level of which Bitcoin does need to hold above. We'll be discussing that in today's video. So starting on that market data, taking a look, 24-hour volume is jumping back upwards to 77 billion. Of course, exiting the weekend, we do get a surge of volume, so 39.31% up in terms of 24-hour volume. With the increase in volume, we see an increase in liquidity, and thus liquidations, 117% up in terms of 24-hour change. This is sitting at 107 million in total. Of the 107 million, there are 60 million long liquidations and 46 million short liquidations. Taking a very brief glimpse at the price action, we can see we have seen a continuation of this uptrend since yesterday's video, reaching that first level of resistance we discussed, which was that POC level. The POC meaning point of control, the point of which within the recent visible structure of price action, the visible range holds the largest amount of resistance. So this is a very key area of resistance that is going to decide whether or not we actually continue upwards or we reject and continue downwards. We'll discuss this in today's video. Moving on from there to the DXY, we can see the DXY is holding on by a literal thread. Again, the most important levels that we do hold above now are going to be that 50 EMA and that base of horizontal support. You can see for the last couple of days, we have been holding steadily above those two levels, and with FOMC just around the corner, that might change, as we could potentially see a drop. We could see a drop in interest rates. Now, it's only a 3.1% probability of a reduction in interest rates, but this is actually the highest probability of a reduction we have seen for a very long time. And we do know the overall narrative right now is that at some point in 2024, the Federal Reserve is going to start to drop interest rates at least 2 to 3 times as they previously discussed. Now, we can't take their word for it as an absolute. They are historically known for going back on their decisions and just doing complete opposite. So we do have to be aware of that. As of right now, the most likely scenario is that we see a pause. And as we've discussed before, the market moves in front of economic decisions, meaning it doesn't matter what they do in terms of moving the interest rates, whether it be a pause or whether it be a drop, as long as the overarching narrative of which they're moving towards is perceived as bullish, the markets will take the news or take the outcome as a step towards that bullish direction. So the narrative is that eventually they're going to be moving interest rates down, dropping interest rates, and that we see a pause today. That pause still aligns with the overall narrative, and thus we will see a bullish reaction, or more likely see a bullish reaction. Now, if we see an increase in interest rates, then this will be contradictory to the overall narrative, and thus we'll see an incredibly bearish reaction. So we do have to keep that in mind. It's not so much what happens now, it's how this will impact the future, and whether or not what happens now is in alignment with the overall perceived narrative which the price action is moving toward. So keep that in mind, guys. Again, as we approach major economic events, we have some massive volatility in risk assets. So we do have to be very much aware that Bitcoin could see some large volatility moving into this in 3 days' time. Moving over to the broader markets, we can see again with the FOMC data coming out, we do have to be a little bit more cautious with the broader markets, with S&P 500, the Dow Jones, and other traditional indices and other traditional assets. We have to be very cautious, as again, the interest rate decision plays a massive role in overall risk in the market, and thus is one of the main components of directions in terms of macro directions for asset prices. So we do have to be very cautious. And again, if we do break below the support level, we would expect a reversal to develop, and we would expect a continuation downwards. That is going to be at range low. While we remain above this area of support, we are still expecting a continuation to 5,000, as that is a psychological level of resistance. Moving over to the Dow Jones, looking a little weaker than the S&P, looking as if we're starting to exhaust. Why are we starting to exhaust? After significantly large bodied candles, we're starting to see these smaller candles develop. And again, this is a sign of that the buyers, right, are starting to exhaust in comparison to the sellers. We can see momentum is starting to plateau out. This is indicative of potential exhaustion. So we do see a breakdown of that range low. We would expect a short-term correction for the Dow Jones. However, while we remain above this local high, this prior all-time high, we are very much going to be macro bullish. So that is it, guys. Let's go ahead and jump into Bitcoin before we do a quick word from Bitget and BingX. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay, let's go ahead and dive in. And like we said, we have a lot to discuss today. We're going to be talking about a new indicator we haven't discussed much, which is going to be the super trend. We'll also go over the macro data, the momentum charts, and of course, guys, discuss more importantly, what we expect to occur moving forward on the immediate short term in regards to the POC resistance, okay, and what reaction we could see from there, and on the daily/weekly charts. So let's go ahead and dive on in, starting on that macro data. So taking a look at this chart over here, for those of you who've been watching the channel for a while, you would know this as the 4-year cycle. This is the weekly view of the 4-year cycle. We have the monthly view of the 4-year cycle over here. On the weekly view of the 4-year cycle, we can see it is broken up into 4 years. Of course, it is a 4-year cycle. Year 1, Year 2, Year 3, Year 4, with Year 1 being the bear market phase. Year 1 is generally the phase where we see an extended downward correction after printing that all-time high, okay? Year 1 is that capitulation phase. It is that bear market. It is that correction phase, which eventually ends up creating the low point of that bear market where we see a reversal develop. Year 2 to 3 is going to be our reversal / accumulation phase. This is generally where we push sideways and slightly upwards, but not upwards enough to break over our yearly levels of resistance. If we go to our monthly chart, our yearly level of macro resistance, the trigger point which actually sends Bitcoin into a new bull run, is represented as that dotted trend line. The dotted trend line is going to reflect the 48k resistance on the linear scale. This again is going to be that dotted monthly trend line. It is the 48k level of resistance, which is the dead cat bounce high after the all-time high. So, okay, the all-time high, we come down, we create a low, okay, we bounce, that dead cat bounce high is that yearly level of resistance, and in this instance is going to be the bullish trigger point for a macro bull run, and of course, it is going to be a major yearly resistance. So we see that major yearly resistance plugged in. During that second year, we do not break through that resistance. We can see we had a second year retest in our second cycle, which we failed to break through. We didn't have a second year retest in our first cycle, and in our third cycle currently, we actually didn't have a second year retest. We retested that in the third year. That brings us to year 3 and 4. In year 3 and 4, we do 2 things. 3 things actually. We break through that yearly resistance, which is reflected by that dashed trend line, which is 48k. Okay, we retest the all-time high of the prior cycle within the third year, and most importantly, we enter a traditional macro bull run for the remainder of the 4th year, printing the all-time high during / near the end of the 4th year. So that is a chart we're looking at right now. If we take a look at our technical indicators, we can see a few indicators that are suggesting the cycle we have seen in the past is playing out. And I've said this many, many times. In fact, guys, we've been saying this for so long. We told you all the way back, we're talking about this stuff back over here. We were saying we expected the bottom to be around 18,000. It went a little bit lower because of the FTX crash. We bought at 16.5k, 19k was the macro reversal. A monthly close over 32,000 would result in a retest of 48k. We've said that way back on our channel with such confidence because we've seen it play out in the past. And we're saying again, a monthly candle over 48k will result in what we have seen in the past play out once more, which is an entrance into a traditional macro bull market. And no data we have at the moment besides pure speculation is denying that claim. Everything we have to go off is suggesting what we have seen in the past is developing to play out again. It has not happened yet because we have not broken through that major trigger point, but we have seen all the dominoes line up perfectly for it to occur. So if it does occur, it won't be a surprise. The most unlikely scenario is that it doesn't occur based on the data we have right now. So let's take a look at the data. The super trend, we can see historically, the super trend, when it flips green on the macro, we generally remain above the super trend the entire time until we reach that all-time high. The exception, of course, was the COVID-19 crash. Now, if we take a look at how the super trend flips, generally when the price action breaks below the super trend after sitting above, it will flip red. The super trend will flip red, flipping green again when we break above the super trend after the price action has been below. As you can see, that correction which took us under the super trend was the COVID-19 crash. This was an anomaly. This was a black swan event. So if we smooth out the data, we can assume that if we did not see that COVID-19 crash, this section would not have turned red. We would have remained in a bullish super trend the entire way through. As we are seeing in this instance, we have broken above the red super trend all the way back at the start of 2023, remaining in this overall bullish trend, which we have remained in since then. And thus we can say, we're looking at this super trend, we can say while we remain above the super trend, which is sitting at 32,000, again, no coincidence. Where is 32,000? 32,000 is this horizontal black line. Again, guys, the horizontal black line in each cycle represents the dead cap bounce low prior to that bounce to the dollar trend line. The dead cap bounce low prior to the bounce toward the dotted trend line, the dead cap bounce low prior to the bounce toward the dotted trend line. So what is the technical indicator saying? It's telling us, provided we remain a monthly candle close above 32,000, we will remain in this overall macro upward trajectory, which is expected to result into a bull market if we continue this direction. What is the monthly chart saying? It is saying exactly the same thing. If we look at the monthly chart, we can see every time we break above the horizontal black line, okay, we remain above the horizontal black line. We broke above here, we broke above here. We never actually close a monthly candle back low. We came down and retested, we closed above it, even during that COVID crash. We closed above it, we never came back down and closed below it. We can see the same thing happening. So it is telling us, provided we remain above 32,000 on the monthly chart, we are still going to be expecting that bull run to develop. And if we go to the daily chart, we can see where that level lines up with. On the daily/weekly chart, on the linear scale, you can see 32,000 lines up in the confluence point of the major 1 year long uptrend. This is a yearly long uptrend, the green line, and the major monthly level of support, which is 32,000, this level right over here that I'm circling. You can see how this area is not only a technical trigger, but it is a structural trigger, as it has a monthly area of support as well as a yearly uptrending diagonal. A loss of this level will result in the monthly trend turning bearish and the yearly trend breaking, which will put us into a macro downtrend. So this area again is not only a technical level of support, it is a major structural level of support. So those are some indicators I'm looking at the macro. At the moment, everything is healthy, everything is looking good. If we bring up some more indicators, such as, let's take a look, such as the pi cycle low, we can see according to historical data, we are moving within the expected range. If we take a look at the halving event, okay, the halving event in the past represented by this dash trend line here, and the dash trend line here, the halving event is expected to occur within April this year. So we go ahead and draw a line in April. There it is. We can see, according to the pi cycle indicator, generally when we break past the halving event, when we go past the halving event, we actually remain at or above, okay, our yellow and green moving average, which is our Bitcoin high short, okay, and our Bitcoin low short moving averages. These are the levels we remain above. So we broke past, remained at/above these levels until we created that all-time high and then broke below it, entering into a downtrend. We broke past the halving, remained at or above these moving averages until again we broke below it, creating a false high, and then finally the correct official high before entering a downtrend. As you can see again, we are moving above these levels, moving into the halving. We expect the same thing to occur after a halving event. We will remain above these moving averages until we create the next high. So there's another indicator suggesting again once more that we are macro bullish. And let's take a look at another one, the Ichimoku cloud baseline. We can see again when we break above the Ichimoku cloud baseline on the weekly, on the monthly, more importantly on the monthly, we can see, and we'll go ahead and actually change this chart to a monthly, we can see that we generally remain above this level on the monthly chart, and we have about 3 days, okay, until a monthly close above this level. We'll discuss this more in tomorrow's video. So let's go over to the short-term chart. I think by now you can see how the dominoes are lining up for the strength on the macro chart. Actually, really quickly, one thing I'd be worried about for this to fail would be if we get the RSI to drop below 62.09 on the weekly chart. That will be indicative of a potential strong correction coming for Bitcoin. Watch out for that in case it does happen. Moving over to the daily and the short-term chart, guys. We can see on the daily chart, we have got a very important trigger point we are watching out for, and that is going to be our positive momentum shift crossover on the RSI. We will at some point, and it's hard to say whether we'll see it now or see it in a couple of weeks. It doesn't really tell us. It tells us there's a trigger point. It will break at some point. When we do see a break of this trigger point, we will likely see a continuation upwards. I am waiting for this breakout. This is going to be the strongest daily signal of bullish strength. More important than anything on the short term, more important than anything on the weekly right now. This is what we're looking for an exact move back towards that 46 to 48K. If you want to see a move to 46, 48k, we absolutely need to see momentum flip positive again. There is no way we're breaking through those levels of resistance without positive momentum. Okay, positive momentum signifies that over a period of time, whether it be the period of time we're looking at here, which is in this instance we have seen the bulls increase buying volume at a significantly faster rate than they have prior, okay? That signifies increased velocity, okay? And more importantly, increased strength, which is likely to push the price action up. As we know, price action moves based on buyers and sellers at the end of the day. So it signifies an increase in strength, okay? So what we have seen in the past is a bearish divergence followed by that downtrend break, and we end up going upwards. A bearish divergence followed by that downtrend break, we end up going upwards. A bearish divergence we'll expect, followed by the downtrend break, and we'd expect the price action to as well go upwards. So again, waiting for that one to play out. Let's go ahead and jump over to the short-term charts really quickly. Moving over to those short-term charts, let's take a look. So as we can see, we are retesting the POC, and the point of control is the key level of resistance we need to break above to continue upwards. If you want to look at it from a volume perspective, you can simply say this: while we remain underneath the POC, the overall trajectory of the trend is going to be down. While we get above the POC, the overall trajectory of the trend is going to be up. That is because the point of control represents the area of highest amount of historical orders and thus highest amount of liquidity, and thus when we're below it, it is an area of strong resistance. A breach above this level, we can see the VRPV starts to drop off. This signifies as we move upwards from the POC, we are moving into an area of low historical resistance. Thus, the required volume for the price action to move upwards significantly decreases, which tells us we are able to move upwards with less resistance, thus a uptrend will develop. On the downside, we can see while we remain under the POC, we have decreasing historical resistance. This is a low historical resistance range, which will facilitate a easier downtrend if triggered. If we go ahead and take a look at our structural levels now, we can see our trigger points for those structural trends. We can see our short-term uptrend represented by the diagonal trend line. While we remain above the diagonal trend line, we would expect the price action to reach the POC. We have done so. If we now break back above the POC, we'd expect this trend to continue. While this diagonal trend line remains intact, again, it is a diagonal trend line. Most diagonal trend lines do break at some point. If we do break below this diagonal trend line, the most important level for us to hold is going to be this area of support. If we hold this area of support, we will very likely continue back upwards. If we break below the area of support, we are correcting back down to 38,000. So, a quick summary. The bounce we expected, okay? The bounce we expected at 38.5k, which we called perfectly, has played out. This is very important you listen to this and you haven't got past this. If you haven't got up to this video, part of the video, well, that just sucks to you. But the bounce in what we expected has now officially played out. It is done. It's finished. We've finished that move. The next move is now developing from the POC. We do not expect the POC to break at the moment. The POC is a resistance, and resistance remains as a resistance until it is not. The most important thing is that if we do retest, and when we retest this area of 40,000, we are able to turn this area into a support, and we're able to hold above this level. So I do not expect an immediate upward continuation right now. In fact, I would actually sort of expect a small correction towards this level. If we don't get it, all good, it doesn't matter. We again are above this area of support, and support is support until it is not. But do not expect clean, easy sailing moving into FOMC. Do not expect to be easy moving into this major data. So guys, keep that in mind. Thank you for watching. Great time to take some profits on some long positions. Again, if you're looking at macro swing positions, there are plenty of good altcoins that are looking very strong. We'll get over some of that stuff tomorrow. Thanks for watching. Catch you guys in the next one. Check out the Crypto Academy courses. There's a 10-unit course, link down below. And of course, guys, join our Telegram channel, link down below. Thanks for tuning in. See you guys later.